Howdy, folks. Good evening. It is Tuesday, May 12th. This is Jeff Camarda with your update. And kind of a brutal day on Wall Street today. The market didn't plunge by a huge amount, like over 1,000, but the trend is ominous, and it does. This recent buoyancy and exuberance seems to be bouncing off the ceiling down here. I'm just going to read a little bit that I've excerpted from a Wall Street Journal article here. And headline is U.S. stocks extend fall as Dow drops more than 400 points. U.S. stocks tumbled Tuesday. I think tumble is a little bit much for the relatively modest drop, but we'll give the media its dramatic due. Giving up modest gains in a sell-off that picked up momentum in the afternoon. Investors had gotten a look at some troubling reports on the economy in recent days. The Labor Department said Tuesday that its Consumer Price Index, a measure of goods for prices for goods and services, it's in there, right? The CPI fell by 0.8% last month. That's deflationary, by the way, not an awfully good sign. Typically, the function of supply and demand, people just ain't buying as much stuff anymore, which marked the largest monthly decline in the index since December of 2008, which was a pretty dark period indeed. At a Senate hearing, top U.S. health officials warned the country should expand testing before reopening the economy. Nonetheless, the economy is reopening in fits and starts in the U.S. and around the world. And of course, a big concern is that do that, too soon and not carefully enough, and things get even worse. And another wave of viral virulence sweeps the country and the world, that's stalling economic recovery even more. The Dow Jones Industrial Average fell 457 points today. Despite a darkening economic outlook, many money managers, they say, believe that the markets have been able to stabilize in the recent weeks thanks in part to aggressive policy actions by the Fed, which is true, but again, the Fed is only going to be able to do so much. This is also disappointing. The latest economic data from China suggested the world's second largest economy won't register a quick rebound. The Producer Price Index, a gauge of factory gate prices, fell deeper into deflation in China in April as the pandemic crimped demand at home and abroad. And China has had much more time to recover, of course. Still in the doldrums, and there's been a resurgence of coronavirus infections in China, including in the epicenter in Wuhan, which registers in more cases that were reported today, probably a lot more than they're telling us, and also in South Korea. That was up till now looked at as relatively protected. And the economic drumbeat is continues to get worse. And despite the fact that the market was down a bit today, again, we fully expect, sadly, the market to really register some significant downside as the full economic impact is appreciated. And I really, nobody knows. You can't project this stuff out. Everybody's guessing, but the market really is divorced from the reality right now of what's happening economically. The economy needs to do well for companies to make money, and the stock prices are really a function of the earnings that companies are able to produce. And if sales and earnings go down, then the stocks just ain't worth what they could be. And by almost every measure, U.S. and worldwide stocks are significantly overvalued. And when that happens, it's not always immediate. The market is driven by fear and greed and human emotion, and not quantitative considerations. But typically we'll reach a tipping point with the greed, which has been, at the forefront over the past month or so, tips into fear. People get scared, they start to sell, and prices go way down, which again is sadly what we're expecting. It's awfully bizarre. I don't think I've ever been in my professional career in a place where, as Dan Howell in our office says, rooting for the market to do poorly. I'm not sure rooting is the right word, but it's a weird place to be, expecting and preparing and strategizing for a market downturn. It's new to me, but I think that really is what we must do to protect our clients' investments and position them to profit, from this tragic period in human history. which really could get a lot worse in a lot of different ways. So anyway, that's more than enough for this evening. Thank you so much for watching. We'll be back tomorrow, Wednesday, May 13th, with hopefully some cheerier news. Have a good and blessed evening. Bye-bye.